Recently, there's been a lot of talk about leverage or borrowing money to accentuate the returns that you are anticipating. And one of the things about leverage is it's great in great markets. So from June of 2020 to say November of 21, markets did great. And if you had taken your principal, borrowed some money, and bought stocks, your portfolio returns were greater. Well, leverage can also work in the opposite way, as we have seen recently with the pension funds of the United Kingdom, where they took their allocation of principal, they borrowed more money on top of that principal, and then they went and bought the British or the UK gilt, which is their version of the bond. Now, their pension funds, roughly 145 of them, if I'm thinking correctly, did this scenario where they took and they bought the British gilt or the UK gilt, and they then borrowed money on top of that to get a greater return. Now, in the bond world, that is often done, especially in great markets where bonds just are really steady and stay steady as is, and they take that borrowed money, they buy more bonds, and they get a bigger return or a bigger yield at the end. And after the servicing of that borrowing of that money, because you are charged, especially if you do trades on margin or you borrow money from a bank or so, you are charged an interest rate. Well, interest rates were so cheap, they borrowed money, made more money on their conservative investments until they weren't conservative anymore. And that's where they got a margin call. And that margin call said, basically the banks said, hey, we want our money back because the economy in the United Kingdom is showing signs of heavy weakness, and we want to get paid back for that money. So you equal up or do what they call a margin call, and that's where you basically add more cash to your brokerage account. And that's when we saw the selling off of the UK gilt or bond, which then created panic in the British pound, and the pound plummeted. Well, this leverage can also be used in a different way. So let's see, back in 2019, Amazon started expanding even heavier, more distribution facilities, and they added more and more employees. And they added more employees because they anticipated the economy would continue to keep going stronger through 2022, 23, 24. But what happened was, say you had a million employees and you only needed 400,000 employees to actually do the job. That is leverage. And so what has happened now is Amazon has laid people off. They're shutting or closing distribution facilities because they don't have the demand. And so now that leverage of employees is coming back on them. And so their way of deleveraging, just fire people. You as an investor, when you open a brokerage account, you often are asked, do you want margin? Margin is giving you the ability to add leverage to your purchase. So instead of buying, say, one share of Amazon stock, you can buy with leverage 2 or 3 more shares. But remember, that can go in reverse and get you into a lot of trouble, especially if Amazon, in this case, the stock price were to fall over the amount you anticipated it to fall, and you would get a margin call. And right now, on a global scale, that's what we're looking at on a corporate, but also on a country level. Countries are getting margin calls.